Alrighty, folks, as we get started with the summer housing market, I have come to believe that we have a good news and a bad news story about U.S. housing market. We're going to have this conversation with Matt, the mortgage guy, greatmortgagebroker.com, and we're going to figure out, is Matt a glass half full or glass half empty guy right now? Because he's going to choose, what does he want first? Does he want dessert or does he want vegetables? Good or bad? Matt, how you
I
doing?
think I want the pain first. I want the pain, then I want you to soothe me with
Okay.
the good news afterwards. So let's rip the Band-Aid. Tell me what you're seeing that's going to be painful.
I am more convinced than ever, as I've been all year, that 2025 is going to be a bad year. You and I have talked about that for the last 9 months. The bad news is July and August are going to be the worst of the worst, right? We are seeing some pretty bad stats for June. I think the summer months are going to be equally, if not worse, existing home sales, new home sales. But then, we reach bottom, right? At the end of August, we're going to roll into the fall. And I think most people are going to be shocked that the fall housing market is better than normal. Now, it's not going to replace the spring selling season by any stretch, but it's going to feel so much better starting in September. So again, the bad news is I know it sucks out there. It's going to suck some more. It's going to suck really hard in July and August, but you're almost through it. You're almost through the hardest year of your career. And, on a positive note, if you are an investor and you're willing to do the work and get concessions, these are the last 2 months. The last 2 months that you can write disrespectful offers and have no competition. Because what happens after this, we're going to have just a different economy. We're going to have the Fed likely lowering rates. You're going to have margin compression in the banks because they're not lending. And you're going to have tax incentives and deregulation. And the positive momentum is going to start to be built in Q4, and 2026 will be better than 2025. So the bad news is, buckle up. It's going to get really ugly, but we're almost through it, and it starts to get incrementally better September, October, November, so on and so forth. So that's what I think's going on right now.
Yeah, and I am a glass half full type of guy, literally like all the time. And I think that, friends and family appreciate that from me. It's like nothing can ever go that wrong. Nothing can ever affect me that negatively. I've been through harder stuff in my life. And so, waking up every day, it's hard to not view it as a win. And I agree with you. And just so everybody's clear, when you say hard, you're talking about not a lot of transactions. So probably the professionals, the real estate agents, the mortgage brokers, the title companies, the insurance agents, are going to feel that, in my opinion, way more than the consumer. If you're a buyer, if you're an investor, this is really good news. I just saw the stat. It was Fannie Mae had revised their 2025 estimate. We all know, crash in transactions. You called it. We've seen it. We felt it. And Fannie's original estimate was like 4.24 million. Well, rates have stayed higher. Buyer sentiment and fear and the economy and all the things have caused, even less buying than they predicted. And so I think the number is like 4.14 now. But I'm with you, and here's what I want people to hear from the whole conversation. It will turn, but if you're an investor, you want to act before the turn. You want to be participating in a market where a seller is like, what's going on? I've got a house that's priced relatively well. Like, why in the heck do I not have any offers? A crazy stat that I heard in Sacramento, which across California, Sacramento is more affordable than the LAs and the San Franciscos and a lot of markets. So, a $500,000 house isn't that big of a stretch. Even these houses, per Ryan Lundquist, SacramentoAppraisalBlog.com, shout out to him and all the great work he does. He showed, for the stuff that was pending in June, average number of offers. And people would be surprised because I don't remember the exact stat, but he, of course, did how he should do. and did like 1 million plus, 750 to a million, 500 to 750. And if you asked me without seeing any of the stats, I would say, yeah, the stuff that's near that 500 median mark got a few offers. I'm not surprised if the ones that are in contract above a million,
Mhm.
only got that one offer. So that number's, but there was no bucket that hadn't, that the average was more than two offers. It was like 1.8,
Wow.
1.6, 1.4. And so even the most competitive bucket by price point is not getting multiple offers. As an investor, you have to love that. The
Mhm.
only people that are, in a pinch or should be concerned are sellers and the agents that have to have the hard conversations with their sellers. If you're a buyer, you should be stoked. But
Mhm.
the caveat is once the turn happens, once it opens up, and whether that's, rates, buyer sentiment, they probably, roll next to each other in to a certain extent. You're going to operate in a different market because a seller who has no offers for 66 days has a lot different, psychology when you write your disrespectful offer than a seller who's got a couple offers, even if they're not like at the full ask they want. Like you want sellers to be operating in a market where you're the only one at the negotiating table and
Yep.
you've got some leverage.
Yeah. Again, I really do believe that July and August are going to be the weakest for transactions, weakest for activity. But the people doing the work, even the agents doing the work, this is where you get the best deals. Because when this turns, and we already have evidence, you can go back and look at the last 3 years. When a mortgage rate prints 5.99, which it has a couple of times in the last 2.5 years, it changes. You add on top of that, uh, you know, the threat of tariff inflation going away. You add on top of that deregulation, tax incentives. You add on top of that the threat of World War III disappearing. We are going to get just a positive jolt. And I will say that a 5.99 is kind of where I'm leaning as kind of the anchor on this. But the fall is going to be better than the summer. And I'm going to be writing a lot of offers in July and August because I want to get one of these great deals, in Vegas area. Whether it's cash and a deep discount or seller financing and near list price, I don't really care which one. But I'm excited. I am more excited about July and August because I know competition is nowhere. So, we're going to write a bunch of offers and see what happens.
Yeah, and buyers, the proof that I saw at a real estate meeting yesterday was somebody raised their hand and said our office closed 92 deals last month, and 84 of those had seller concessions. Sacramento, compared to a lot of these markets across the country, isn't as soft. It's not as inventory flooded at some of these other markets, and so if we've got 90% of stuff going into contract getting seller concessions, I'm sure there's other markets at that number, near that number, even above that number.
For
And so
sure.
go out there and negotiate great credits. I've got a client. I know they're an ORAT listener. Referred me a family member in a really competitive, Elk Grove that's sub market near Sacramento. They're getting this house with a $15,000 seller credit. And the cool part in my eyes is you structure it where it's 499 for the first year, 599 for the second year. If and when rates go to 599 like you talked about, everybody else comes out of the woodwork. This house will sell for $30,000 or $40,000 more because it's not an
Mhm.
expensive house. It's
Yeah.
entry level, the type of house and the neighborhood that everybody wants. And so you get it now at 600, you get it with a great rate that the seller paid for.
Right.
And then rates go to 5.5 in 18 months. You refinance it. You've got 6 months of this subsidy left. Oh, by the way, you get that back on these temporary buy downs. It's not a sunk cost that's gone forever. So that just gets applied towards your principal. And then you get to see the stuff selling around you for 640
Mhm.
because at 5.5% interest rate, buyers can and they will pay
Yep.
more for that house. And so, yeah, it's opportunity is all I see. Call that rose-colored glasses, if you will. But a slow market. The only I wouldn't call them losers, but the only people who are going to suffer, in my opinion, are the sellers and the ones that are
Yeah.
unrealistic, that don't realize, yeah, when you've got 72 houses in this zip code for sale, you're not going to be able to demand a premium.
Yeah. It's going to be really interesting, folks. Again, we've been through this. I've been calling it all year. Now I'm calling the bottom at the end of August. And, as always, we'll see if I'm right. But I'm going to be taking action, writing a bunch of offers July and August, see what I can get. Matt, if somebody wanted to reach out to you, what do they do?
Just go to greatmortgagebroker.com. We're operating in 48 states, so we're happy to help. And you got to start somewhere. I've had a lot of conversations too, with people that will ultimately, work with somebody else on my team. But initially, I just want to have a conversation. It's funny too. I had somebody. I'm not really that hard to find on the internet. Somebody calls me yesterday, and I can't answer every single out of state call, but I answer it. Oh, like I didn't think I'd get you. And can we schedule something? I said, well, you got me now. Let's talk for 10 minutes. And I think what not enough people do, usually my call to action is go get yourself pre-approved, know your numbers. My call to action based on the conversations I've had recently is like, put some time and some thought into what you want to do. I had a conversation yesterday, great guy, investor, real estate agent, no clue what he wants things in real estate to look like in 5 or 10 years, which I think is, quite honestly, Mike, a lot of people. There's a lot of people that are just like, I know I want to invest. I know that it's going to add net worth. Maybe I'll get some cash flow. But like, if you truly want something to happen that aligns with your goals, the first step is knowing those friggin' goals.
Yeah, I can't believe it. Folks, go to greatmortgagebroker.com. Get the process started today. Matt, you're amazing. Have a good week.
Yep, you too. Thanks, Mike.